And there's one more company that we should actually talk about today, and it is Telstra. Australia's biggest telecommunications company today said full-year profit was down 4.6% to $1.8 billion. Total income was down 4.7% to $22 billion. Yet Telstra increased its final dividend for the first time in 7 years to 8.5 cents a share, and that takes the annual dividend to 16.5 cents. The company's return on equity also fell, down to 11.3%. All that said, the outlook is much brighter. And I caught up with the outgoing CEO, Andy Penn, a little earlier today.
Well, look, I think the thing about FY22 for us is that it really marks an inflection point, because one of the dynamics is it's the last year in which we see the negative economic impact of the transition to the NBN in our results. And so whilst, as you say, net PAT and income and EBITDA on a reported basis is down 5%, actually on an underlying basis, EBITDA was up 8.4%, EPS was up nearly 50%, and we're really starting to see the underlying performance in the business coming through, and that's why the board has made a decision to increase the dividend to demonstrate that confidence.
Okay, just explain to people who might not understand, including me perhaps, and that is, why is it that money coming from NBN as part of the transition of your networks into that business, why is cash coming from them actually causing your business to grow more slowly?
Well, look, the bottom line is the NBN was created to essentially take over a part of our business which historically we've been running. And so at a practical level, what that means is about a third of our business has gradually transferred to the NBN. And as it's transferred over time, understandably, our earnings have reduced. And interestingly, you saw earlier this week, NBN's earnings are increasing. And in fact, cumulatively, on an annualised basis, our earnings have reduced by 3.6 billion Australian dollars. And NBN's obviously earnings have increased. And it's just purely that transition. Now, we have been paid some compensatory payments for that, around about $11 billion all up. But, you know, you follow the investment markets. We lose 3.6 billion annualised. We get 11 billion compensation. But look, that's a deal that was done a long time ago. The most important thing is, however, our underlying business is growing. We're in great shape. Our mobiles business grew $700 million this year. And, you know, I'm obviously stepping down at this point of time, but I'm handing over to some great leadership in Vicky Brady, and a great period of growth ahead.
Okay, so the period of growth comes ahead as the end of this transition with NBN takes place, but you've still got highly competitive mobile markets out there. You've right now got a fight on your hands to be able to try and merge your operations with TPG in regional areas. I spoke with the Chief Executive of Optus this week about that. They are opposing that through the ACCC. So there's still significant changes that will take place to this telecommunications landscape into the future.
Well, Optus oppose everything that we do, frankly. That's just because we tend to be outperforming them on pretty much every front. But let's put that to one side. The deal with TPG, it isn't a merger. They probably said it is. It's not. It's a network sharing agreement. And it's exactly the sort of network sharing agreement that the ACCC has historically encouraged, because it's great for customers and it's great for the industry overall. Look, you know, there's always stuff going on at Telstra, but importantly, our mobiles business is growing very strongly. As I mentioned, we added 155,000 new postpaid customers, 215,000 new prepaid unique users. Our underlying EBITDA is up, EPS is up nearly 50%. And in fact, we've got an outlook, or rather an ambition, to grow EPS between FY21 and FY25 of high teens. That sends a good message for the dividend, which, as I say, the board declared an increase today just to show their confidence in the future trajectory of the business.
Okay, one thing that you and I have spoken about for a long, long time is, how does a business such as Telstra move away from being the provider of the networks, whereas others are actually making money from the networks that you provide? How do you share in that wealth that is created? One of the examples is Telstra Health, I would suggest. You know, revenues of $243 million, up by 51%. Now, I know that represents around 1% of total revenues of Telstra at this stage, but it's the growth that's the important aspect of it.
That's exactly right, Ross. I mean, we'll always be a telco, and so therefore, you know, focusing on providing great telecommunications and great infrastructure is going to be critical to the future success of our business. But to your point, you know, the real question for a telco is, how do we capture more of the value that's delivered above the level of the network. And so Telstra Health's a great example. Another really good example is our cloud business, which is growing in high teens growth and is now a $300 million business. Similarly, our security business, so cybersecurity has become an incredibly important area, and that's growing very, very strongly as well. And our NAS business overall, NAS really sort of bundles up all of these technology services. We call it network application services. EBITDA in our NAS business grew 152 million this year. So it's about making sure we deliver the best network with the best infrastructure and the best experience, and we're doing that with our 5G networks and our mobile networks. But then, as you say, building the capabilities and the propositions that can actually add value above the layer of network as well. And that's actually what T22, our strategy, which we're just concluding, has been all about, is building the foundations for all of that, and then Vicky will take it forward with T25 as we leverage growth off the top of it.
Okay, and just tell me about inflation right now inside your business. Are you feeling the inflationary impacts inside your business in regards to wages, other aspects of it? Because that's also a part of the outlook, of course.
Yeah, no, look, it is. And I spoke this morning about how the fact that we live in, very different times at the moment, even since we launched T22, there's been some pretty seismic shifts in the economic environment, the geopolitical environment, in ESG and the digital environment. But look, I think our business is as well positioned as any and better than many in relation to the economic uncertainty. We've got a strong balance sheet. There's a lot of natural hedges in our business. There's CPI increases built into our partnership and our revenues that we get from the NBN. And we've actually just concluded our enterprise agreement negotiations for the next couple of years, which lock in pay rises at about 2.5% and 3% over the next 2 years. So I'm not saying we're immune from inflation. We will feel it. We'll feel it a little bit on the CapEx side. We've just gone through the process of detailed negotiations on our new intercapital fibre build, and certainly we're seeing inflation there. But look, the net now overall is that we think we're in a pretty strong position to perform well, notwithstanding the economic uncertainty.
Andy Penn, always great to chat to you. We'll do it again in the next week or so. Many thanks for your time today.